These are 7 top big cap stocks with large percentage gains today. While watching bullish price actions, let us inform you our review on QSG QuantaSing Group Ltd, a China-based company specializing in adult learning courses, just delivered a jaw-dropping 63% surge in its stock price today. That's the kind of move that makes investors sit up and take notice. The company operates in the online education space, offering financial knowledge courses under its Qingyou, Jiangjin, and Qianqi brands, along with a diverse range of personal interest courses, from traditional Chinese painting and aero to data analytics, and even short video production. With a focus on China's growing demand for lifelong learning, QuantaSing has positioned itself as a key player in the domestic market. So, what's behind this massive spike? A move like this doesn't happen randomly. While there's no immediately obvious major news release, rallies of this magnitude are often sparked by a few key factors: earnings surprises, a major partnership, a regulatory shift, or even just momentum traders jumping in. Given QuantaSing's focus on online education in China, any positive development, like strong user growth, better than expected revenue, or an expansion of its course offerings, could be fueling investor enthusiasm. It's also possible that broader market sentiment around Chinese tech and education stocks is shifting, creating a ripple effect that's pushing QuantaSing higher. Another angle to consider is speculation. When a stock moves this aggressively in a single day, it often attracts short-term traders looking to ride the wave, which can amplify gains in the short term. But the big question for investors is whether this momentum is sustainable. If there's real substance behind this rally, such as strong earnings or a game-changing partnership, QuantaSing could be setting up for a longer-term uptrend. On the flip side, if this spike is purely fueled by hype and short-term speculation, there's always the risk of a sharp pullback. Either way, today's price action has put QuantaSing on a lot of investors' radars. Whether this is the start of something bigger or just a flash in the pan, it's a name worth watching in the fast-evolving online education space. Our review on NUTX Health Inc, a healthcare management and operations company, just dropped some serious numbers, and investors are paying attention. The company, known for its network of micro-hospitals and outpatient facilities, posted a massive financial turnaround for 2024, and we're not talking small gains here. Revenue shot up nearly 94% year over year, hitting $479.9 million, and they flipped from a $45.8 million loss in 2023 to a $52.2 million net income. That's a major swing. The arbitration process played a huge role, bringing in an extra $169.7 million in revenue. Nutex fought for higher reimbursement rates, won, and now they're getting paid what they believe is fair market value for their services. On top of that, patient visits climbed nearly 17%, showing stronger demand, while their mix of services improved, meaning higher revenue per visit. And when we zoom in on Q4, things get even crazier. $257.6 million in revenue, up 270% from Q4 2023, with a net income of $61.7 million. That's the kind of financial turnaround that gets Wall Street's attention. No surprise, the stock soared 51% today, and analysts are backing up the momentum. Benchmark's Bill Sutherland slapped a buy rating on it with a $60 price target, citing strong financials and strategic moves. With arbitration success boosting margins and Nutex optimizing operations, the company is heading into 2025 with solid momentum. The big question now, can they sustain this growth and continue leveraging their model to expand? But for now, Nutex just proved it's not just surviving, it's thriving. Our review on CRWV. CoreWeave Incorporated is a cloud infrastructure company that's made a name for itself in the growing AI space. Their CoreWeave cloud platform is specifically built to handle complex AI workloads like model training and inference, offering high-performance GPUs, CPUs, and storage to meet the demands of AI companies. On top of that, they provide managed software services and application software to make their infrastructure even more flexible. CoreWeave's debut on the public market wasn't exactly smooth. After their IPO last week, the stock took a dip, and investors were concerned about their debt load and the potential slowdown in AI infrastructure spending. The company also had to scale back its offering, reducing the number of shares from 49 million to 37.5 million, reflecting some caution in light of the uncertain market. However, today's a different story. The stock is up 41%, and there are a couple of key reasons behind the jump. One is the strong earnings report from Progress, a smaller AI infrastructure provider that posted 30% year-over-year revenue growth, signaling that demand for AI infrastructure is still going strong. That has likely helped shift sentiment around CoreWeave, which operates in the same space. But the real catalyst for the surge is CoreWeave's $11.9 billion deal with OpenAI. This contract is a huge win for the company, guaranteeing them a critical role in expanding OpenAI's AI compute capacity. This deal not only boosts CoreWeave's revenue, but also helps address some of the debt they've accumulated in scaling up their infrastructure. Investors are clearly reacting to the news, and it's no surprise given the broader AI market growth. CoreWeave seems to be in the right place at the right time, and with major deals like the one with OpenAI, they're positioning themselves for future growth. While the IPO had a rough start, today's surge shows that investors are starting to see the company's potential. If CoreWeave can keep securing these high-profile contracts and capitalize on the expanding AI market, this could just be the beginning of bigger things to come. Our review on LSE, Leishen Energy Holding Co. Ltd, a company providing clean energy equipment and integrated solutions for the oil and gas industry, saw its stock soar 32% today. With segments focused on clean energy equipment, oil and gas engineering services, LNG processing, and digitalization, Leishen is firmly positioned at the crossroads of traditional energy and the clean energy transition. The 32% surge is likely tied to growing confidence in Leishen's ability to deliver both traditional oil and gas solutions and innovative clean energy offerings, such as hydrogen compressors and LNG operations. As demand for sustainable energy solutions increases, Leishen's diverse portfolio seems to be gaining more attention from investors. If the company continues to capitalize on the shift toward cleaner energy while maintaining its strong presence in oil and gas, this stock surge could signal the beginning of a promising growth trajectory. The market is clearly optimistic about their future in both energy sectors. Our review on MVST. Microvast Holdings Inc. is making waves in the advanced battery tech space, specializing in batteries for electric commercial vehicles and large-scale energy storage systems. Their focus on innovation, from cell materials to cooling systems, positions them as a key player in the transition to cleaner energy. Now, let's talk about their 32% stock jump after their Q4 earnings call. Here's why it's happening. The company reported a record annual revenue of $380 million, marking a 24% year-over-year increase, with Q4 alone contributing a significant $113.4 million. The growth is impressive, especially in the EMEA, Europe, Middle East, and Africa region, where they saw a 123% increase in revenue, driven by demand in key markets like Italy and Germany. This shows that their market expansion efforts are paying off. On top of that, they improved their gross margin to 31.5%, up from 18.7% last year, and even hit 36.6% in Q4. Strong signs of operational efficiency. That being said, it wasn't all sunshine and roses. Despite the positive growth metrics, the company still posted a GAAP net loss of $195.5 million for 2024, up from $106.4 million in 2023. The APAC region also saw a 19% revenue decline, partly due to their shift away from lower-margin business segments and increased competition. So, while their focus on more profitable areas is good long-term, it did impact short-term results. The good news is that Microvast is pushing forward with key technological advancements, particularly in silicon-based cells and all-solid-state batteries, positioning themselves as a leader in battery innovation. They're also targeting revenue growth of 18% to 25% in 2025, with a goal of reaching $450 million to $475 million in revenue and maintaining a 30% gross margin. Even with some challenges, investors seem optimistic about Microvast's future, and that's likely why the stock surged today. The company's combination of strong market growth, operational improvements, and continued focus on innovation suggests they're on a solid path to future profitability. Keep an eye on how they manage these growing pains, but for now, their forward guidance looks promising. Our review on VERU. Veru Inc. is a late-stage biopharmaceutical company with a focus on developing treatments for metabolic diseases, oncology, and acute respiratory distress syndrome, ERDS. They're advancing two promising small molecules, enobosarm and sabizabulin, that have been showing potential in late-stage clinical trials. Now, let's talk about why Veru stock is up 30% today. The company's recent gains can likely be attributed to the progress they've made in their drug development programs. Specifically, enobosarm, which is being tested for a range of conditions including sarcopenic obesity and metastatic breast cancer, is at the heart of their clinical strategy. The Phase 2b quality study for sarcopenic obesity and Phase 3 Enabler 2 trial for breast cancer are both pivotal trials that could have huge implications for Veru's future. Additionally, sabizabulin, their treatment for viral-induced ARDS, is showing promise for hospitalized patients, adding another layer of optimism for investors. The company's clinical advancements, especially in these high-stakes areas, have positioned Veru for some serious attention, particularly if these trials succeed. The 30% jump in stock price suggests that investors are feeling confident about Veru's potential. Whether it's because of the progress in clinical trials or the broader optimism around biopharma stocks, there's no doubt that Veru is riding a wave of momentum right now. If their trials continue to show positive results, this could just be the beginning of a much larger move. Our review on CSAI. Cloudastructure Inc. is making serious moves in the AI-driven security space, delivering cutting-edge cloud-based video surveillance and remote guarding solutions. Their tech brings artificial intelligence and machine learning into security monitoring, offering businesses a smarter, more automated way to protect their assets. With a focus on scalability and efficiency, Cloudastructure is proving that AI-powered security isn't just the future, it's already here. Now, let's dive into why Cloudastructure stock is soaring 28% today. The company just released strong 2024 financial results, and investors are clearly liking what they see. Revenue surged 125% year-over-year to $1.4 million, showing massive demand growth across multiple segments. They also significantly reduced operating losses, with EPS improving from a 60-cent loss last year to 45 cents this year, a solid step toward profitability. But here's where it gets even more interesting. Remote guarding revenue exploded by 404%. Cloud surveillance subscription revenue jumped 48%, and hardware sales climbed 250%. That's a major sign that customers are not just testing out their AI-powered security solutions, but actively adopting them at a much larger scale. The company also increased new locations by 30%, reinforcing that growth isn't limited to just one area. It's broad-based across their entire business. One of the biggest takeaways from this earnings report is that Cloudastructure is scaling efficiently. They've turned a gross loss into a gross profit which is a crucial milestone for any high-growth company looking to achieve long-term sustainability. CEO James McCormick emphasized that with a scalable platform, improving margins, and a clear path to cash flow positivity, Cloudastructure is well-positioned to lead the AI-powered security industry. Investors are reacting strongly because this isn't just about revenue growth. It's about a business model that's proving its viability. AI-driven security is an expanding market, and Cloudastructure is showing that it can compete and win in this space. If they continue to execute well, this could be just the beginning of a much bigger run. Please subscribe, give the video a like, and watch more from our playlist. Thanks.